You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer.
Hi, it's Victor here from foreshortmarkets.com. In today's video, I will be teaching you how to analyze fundamental data. Okay, we'll be looking at how to carry out fundamental analysis. And what I'm about to teach you in this video cannot be gotten from any website, cannot be gotten from any blog, cannot be gotten online. This is my personal experience I'm sharing with you. Okay, so the basics of fundamental analysis is basically your economy is doing well, the value of your currency goes higher. Your economy is doing badly, the value of your currency goes lower. Let's take Nigeria as an example. One of the reasons why you need to learn how to trade forex, why you need to analyze the forex market, is to be able to capitalize on opportunities even in your own economy, in your own country. And I use Nigeria as a very good example. Okay, being able to analyze the market has allowed me, cash out on a lot of opportunities in different markets. You talk about cryptocurrency, talk about forex market, okay, talk about even the Nigerian stock market and all of that. And so particularly I want to talk about the current exchange rate of the naira. Okay, the current exchange rate is around 465 naira to the dollar, of course, in the black market, the parallel market. And of course, we are currently struggling with different exchange rates, okay, multiple exchange rates. We have exchange rate for the black market, we have exchange rate for exporters, and then we have official exchange rate. Official exchange rate as 360, exporters exchange rate somewhere around 390, and then black market now 465. Okay, and when a country is having multiple exchange rates, this is another fundamental factor, okay, that is also affecting our economy. Okay, and the World Bank has repeatedly suggested to our central bank to harmonize our exchange rate so that we can have one exchange rate, and this will give more confidence to investors, more confidence to people, for people to do business in Nigeria. Okay, so back to the exchange rate. A while back, sometime in January or March, all right, having seen what was going on globally, first of all, the coronavirus, and then directly crude oil was affected. Okay, so learn something now. Nigerian economy is 100% or 95% crude oil dependent. Okay, when crude oil prices crash, it directly hits the Nigerian economy. Okay, and of course, when the Nigerian economy is hit, of course, remember here, you said bad economy is equals to what? Lower currency. Once you start seeing bad signs in the Nigerian economy, the first thing that should come to your mind is that the dollar is going to either fall or be devalued. Okay, and so I sent a broadcast on my WhatsApp channel. If you're on my WhatsApp status, or if you're in my WhatsApp broadcast list, I sent a broadcast. I said, this is what I'm saying. Okay, rumors are beginning to fly. Convert your naira to dollar, okay, if you don't want to lose, if you don't want to suffer the effect of inflation. And the price then, at least on FXTM, it was 361, and in the black market it was around 360, 359. Okay, and after I sent that message, the next day, 2 days time, the value of the currency, the naira to the dollar, went from 361 to 375. In a few days it was 390, in a few days it was 400, before 420, 450, and we find ourselves at 465. So it's not this knowledge about financial markets and forex is not just about trading every day and business. It's about where can you put your money to have the best value at any point in time. Okay, and so at that point in time, keeping naira in your bank account it was a big waste. Okay, and so with the right fundamental, being able to do fundamental analysis helps you, decide where to put your money at any point in time. And so all those who converted their naira, okay, to dollars are currently, very, very happy, and of course reaping the benefits of that move. Okay, don't be surprised if you get to 500. Don't be surprised if you get to 600. But one thing I can tell you is that as long as the Nigerian economy and corruption continues at the rate at which it is, this principle is going to continue affecting our currency. Bad economy, the naira will continue dropping in value. Okay, and I am properly positioned in that market. Okay, if the naira is going to crash to 1,000, you're right. We are there. We are waiting. Okay, you just have to be smart and put your money in the right vehicles. Okay, so that's basically just an example of why you need to know your fundamental analysis, whether you are a trader or not. Okay, your money is important to you, and you need to know how to secure your money and grow your money. Okay, so what are the factors that make an economy bad, or what are the factors that make an economy good? Let's look at them. There are so many of them. Okay, from the most important to the least important. Some are more important than others. Okay, so let's list a few of them. This video, I'm going to have to cut it into two. Okay, because let's see how do I do it now, because this I usually talk a lot when it comes to fundamental analysis. Okay, so let's see, how do we do this now? We'll do it in parts. Okay, so let's look at Forex Factory, and we'll start listing some of the data that affects your currency. Okay, like I can see Flash Manufacturing PMI. Okay, so if you want to see what this means, simply come and click on this box. Okay, and you can see it drops down there, and you can read what exactly is this data. You can use Google. If you're a beginner, you can use Google to just read up. Learning this is all about self-learning. You need to read a lot. You need to watch a lot of videos. Okay, so this measures the level of the division index, blah blah blah, based on surveyed purchasing managers in the manufacturing industry. Okay, why do traders care? It's a leading indicator of economic health. Business reacts quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Okay, so what this is simply saying is that in every big company, especially in manufacturing, so this is for manufacturing, you have purchasing managers. Because they are manufacturing, they tend to buy a lot of stuff, raw materials and all of that for their manufacturing. Okay, and so the purchasing managers know the volume of trade that they do on every month. Okay, some months it can be higher, some months it can be lower, depending on what is going on in the economy. For example, now, okay, in this period, you can expect that this purchasing managers index is lower than it was last year, or in January, or in February, because of the lockdown and all of that. Okay, so that is basically it. So if the purchasing managers index, so many of the purchasing managers will bring their own forecast, and then they will collect it and get the average, and then they release it here. Okay, they release it to the public. Okay, let me see, where is that? Okay, they release it to the public. They have not put the numbers yet. Okay, so they release a forecast to the public. Example here, you will see the forecast. Okay, you see the forecast, and then you will see the actual. The actual is the actual number that will be released when it's released. Then this is the previous one that was released. When the data comes out, if the number is higher than the forecast, then it's good news. Okay, if the number is lower than the forecast, then it's bad news. Okay, so there are different ways to interpret that. Some other set of data, if the number is lower than the forecast, it's good news, and if the number is higher than the forecast, it's bad news. Example, unemployment. So if unemployment numbers are higher than the forecast, that's bad news for an economy. Okay, and if unemployment is lower, if unemployment is lower, yes, so if unemployment is lower for an economy, that is good news for the economy, and of course you expect that currency would immediately start growing stronger. Okay, so there are so many of them, but the important thing you need to know is that there's a forecast, okay, that is gotten from different organizations. Then there's a previous number, then there's an actual number. What makes the market react is whether this actual number is higher than the forecast or lower than the forecast. So what you need to do is get the date, get the time, right? If it's a high impact news, come to your chart, okay? As a beginner, just go to your chart, maybe just go to a 5-minute chart, and then once the time hits that exact time, just watch your chart and see how the market moves. You will notice and experience a lot of volatility. Okay, so I think I will stop there for this video. Okay, then in the next video we start going into these factors one after the other, because there are a lot of them. I'll talk on as many of them as possible I can cover. Okay, so if you've learned something new, give us a thumbs up. If this is your first time watching the video, make sure you click the subscribe button, click the bell beside the subscribe button, click all notifications so that you can get notified whenever we upload a new video. Okay, you don't want to take, when it comes to trading and investing, you don't want what I'm sharing now, fundamental analysis especially, you don't want to take it for granted. Get your biros, get your notes, and take as much notes as necessary. This is really, when you get fundamental analysis, you grow beyond a technical analyst trader. You see the market from a bigger picture and a bigger perspective. Okay, so I'll see you in the next video. Have an amazing day. Cheers.